Thanks everyone, and thanks to RIU for having us. Now I recognise that I'm the only thing just standing between all of you out there and a sumptuous lunch, so I'll do my best to stick to the program. So why Zenith? I was very fortunate to be involved in Zenith from the early part of last calendar year. We have a very, very clear strategy. We're focused on precious and base metals. And the strategy is to focus on targets that are material and large scale. And you'll see a theme of this right through the body of the presentation. We want to make a significant impact to the value of the company. So in the past 12 months, we've made 2 discoveries in our own right. And there's been a major discovery with a joint venture partner, the RIU project, which I'll touch upon during the course of the conversation. The gold projects are in Tier 1 regions. And proven multi-million ounce regions. From the perspective of cash, and this question comes up quite a lot for us currently, how's your cash? We've got sufficient cash within the business to run us well into the third quarter of the calendar year with the programs we have planned. So let's have a look at gold. A bit like Richard's talk, I can only touch on a few things, but today I'm going to touch on the Red Mountain project in Queensland, which is a virgin discovery by the exploration team, and the Split Rocks discovery in Western Australia. 2 quite different propositions. One's high grade, probably an underground proposition in Queensland, and the second one is lower grade open pit proposition. So turning to Queensland, you can see in the bottom of the slide there, the Red Mountain project just above Krakow and Mount Rawdon. This is a proven gold district, over 15 million ounces found in the recent past. And it's just incredible that Red Mountain in the middle of a first world country is a virgin discovery in a very sort of well-endowed region. I'll also draw your attention on the slide at the top, just keep in the back of your mind the Mount Wright project, because I'm going to talk about that a bit going forward. So the discovery of Red Mountain was via soils. We can see on the image on your left is a surface geochemical plan of the deposit. And what you can see there is the sort of, if you like, the hot colours, the highs of a 600 metre long anomaly on the western side of the breccia pipe. So what do these things look like? They effectively look like a baguette or a cigar vertically in the earth, and we began drilling that anomaly in the early part of last calendar year. On the right-hand side, you can then see we've started to progress down with depth with meaningful high-grade intersections to about 200 vertical metres. We're actively drilling now, and we will continue to drill for the remainder of this calendar year. The reason I mention Mount Wright is because of this image. It's the same geology, the same chemistry, and looks like a very similar sort of breccia pipe structure. Mount Wright was a mine that was exploited by Resolute, just under 1 million ounces, down to a depth of about 1,000 vertical metres. In our case, we're only down that top 200 metres. So and what we've done there on that image on the right-hand side is you can see the silhouette of the Mount Wright deposit, just purely for illustrative purposes so you understand what we're chasing. So I would leave it with you to watch this space. We have already hit free gold, commercial grade mineralisation down to about 200 vertical metres, and we continue to drill. So a virgin discovery in a first world country, actively being drilled for the rest of this year. We'll now jump to Western Australia. Probably a pretty well-known area for many of you. You can see Southern Cross at the top of the screen, so about halfway between Perth and Kalgoorlie. Classic Archean greenstone-hosted mineralisation. Some very well-known deposits surrounding our ground, which is outlined there in the blue leasehold areas, and we're going to focus in on the sort of brown rectangle or brown box. So 10 million ounce region. We defined last year 18 targets over 18 kilometres of strike extent and began air core drilling, soil sampling, then followed it up with RC drilling. And so just advancing that, we've already defined a zone that is 2 kilometres long within our lease area, and you can see some of the intersections there at the Dulce Laterite pit. So starting at the top, that's that yellow image in the centre, 14 metres at 3.5, 18 at 2, 19 at 3.9, etc, etc. So we've defined this zone over 2 kilometres down to about 140 metres vertical depth. It's a shallow dipping shear zone between 4 and 15 metres in width, and we'll continue to assess that over time. If we look at what's happening right now, we're about to kick off another 100-hole drill program on this area within this month, and we'll plan really to see if we can build upon it. As you can see here, we've already got in excess of 2 kilometres defined. Plenty of work to do here, but this is also a virgin discovery, a very exciting discovery, which we'll follow up on. So within our portfolio, they're the two most advanced gold assets. I'll now move to base metals and talk a bit about the portfolio. So there's two projects I'm going to touch upon today. The Devlin Creek Copper Zinc project, which we own 100% in our own right, and of course the recent Erahidi discovery with Rumble Resources in Western Australia, which we have a 25% interest in, and it certainly has been an excitement machine over the past couple of months. Look, I've sat through the past couple of presentations, and I think you've all had a fairly good dissertation on why you should be involved in the copper space. We're equally positive about the copper space. I'll just add one more statistic to what has been put up by Richard and the Coda guys. By 2028, the copper market currently is about 22 million tonnes per annum of consumption. By 2028, it's predicted to be in deficit by 5.4 million tonnes, so circa 20% in deficit. In order to make up the gap, there needs to be, which is in the bottom chart there, $106 billion invested to close the gap. As Richard said, there's still not a recognition in the greater world that that investment needs to be made to make up the gap. So that's just for, as we said, the normal turning your lights on, running your power and that sort of thing. It takes no account of the green revolution that's taking place around the world. We're very bullish copper. We're happy to be in that space. We'll remain in that space as we move forward. So Devlin Creek is a project that's been within the Zenith portfolio for some time. And I mentioned in the first slide this concept of scale. So all of our projects have scale, and this is no different. So what I've got on the slide there is an illustration of a typical VMS, or volcanogenic massive sulfide deposit, that are known around the world to be relatively high grade, tend to occur in swarms and pods. And there's two very notable examples there, being the Golden Grove project in Western Australia and the Jaguar deposit. Both, well, Golden Grove, 40 odd million tonnes of resource, and Jaguar 9 million tonne. And then you get these monsters like Naranda in the Americas. You can see in each image there's a scale bar, 10 kilometres. Our project, Devlin Creek, is illustrated on the right of the page. Same scale bar, same scale. So we're looking at a large scale project to evaluate. If we zoom in on that a bit, there's 50 kilometres of favourable stratigraphy. It already has a pre-existing JORC compliant resource established. So this is not a moose pasture, this is not a new initiative. We've got a defined resource, we're trying to build upon it. At Sulphide City in the north, you can see we've got 2.6 million tonnes at just under 1.8% copper with zinc, gold and silver. We're actively drilling right now, and in fact, yesterday we announced that we had intersected a zone there of 16.5 metres of massive sulphides. So I'd suggest you have a read of that announcement. So we're actively drilling there, and we're actively drilling about 25 kilometres away at the Snook deposit. And as at the same time, we're flying geophysics with drone mag. So this is a project that will develop over time. We've got a very clear objective. What we're trying to do is get that 2.5 odd million tonnes up around 10 million tonnes. It starts to get to scale, it starts to get significant, and clearly we're adding to our inventory in the business. So Erahidi, how many people have heard of the Erahidi release that occurred? There's a few hands going up. Yeah, so very material discovery that's been made with our joint venture partner, Rumble Resources. It's a zinc discovery. I'll just leave you with this. Again, it's a scale thing. The guys have defined a zone that's at least 1,500 metres wide, 2,200 metres in length. It's open in both directions with material intersections such as 34 metres at 4.2, etc. for zinc. If the Rumble guys have suggested that this project, they had an exploration target of between 40 and 100 million tonnes. They're quite comfortable to suggest that the target is now well in the upper range of that size. So we're looking at a big scale project here. I just wanted to leave you with a couple of other points. It's relatively shallow, it's reasonably good grade, it extends for a big area. So what the Rumble guys are going to do, they've just completed raising $40 million, is they're going to hit this very hard with drilling throughout the remainder of the year. So if you haven't seen it, have a look at it. It's a major discovery within Australia. So first world country, big base metals discovery, most likely open pittable, which is cheap, large scale mining. So we're very excited to be involved in it. I think, sorry, I'll just go back a step. I think the other point that I wanted to make here is from Zenith's point of view, we feel that we're in a pretty neat position. We have 25% equity in the project. We are free carried to the end of bankable feasibility study. Both parties have reciprocal preemptive rights. So from the point of view of value generation, we feel that this project really has the ability to generate value. I thought I'd put this slide up because it's interesting to reflect on where we are in the cycle, in the mining cycle, and where in fact Zenith is within that cycle. For the past probably 10 years, it's been a very difficult space to be in, as we know. And in that period, the exploration team led by Mick Clifford, our CEO, who's here today, and I'd urge you to have a chat with him. They've been accumulating assets, evaluating assets, obviously rejecting assets that don't make the cut in a pretty ruthless way. But what's unusual about the Zenith story is we have 4 assets that are all on the cusp of moving to drill out stage. We're not in moose pasture, we're not speculating, we have real projects with real value. Obviously Erahidi is broken first and it's on its way up that value curve, but sitting behind it we have 2 gold projects and 1 base metals project being Red Mountain, Devlin Creek and Split Rocks. That's an enviable position to be in for a small operator. So we've just started to move up that value curve. So what's going to happen in the next little while? We're pretty busy. With Red Mountain, the objective is to define a resource by the end of this calendar year. Split Rocks, it's the same. It's exactly the same argument. Devlin Creek copper, build on the current copper resource which we already have. And I've just given you a little bit of a flavour for Erahidi, but it's really defined the ultimate size of this thing. It's a mega tier 1 project. So plenty of news. Why Zenith? We've got a very clear strategy. Right commodities, right time. We'll continue to generate results for the remainder of this calendar year and well into the next calendar year. We're very, very focused on adding metal inventory to our portfolio. You can value metal, and we're finding metal, and we're finding it at a pretty fast pace. So activity levels will be high, news flow will be high. I'd urge you to pop by our booth and have a chat to us over the course of the next 2.5 days. And with that, perhaps I might finish and let you all go and have a bit of lunch and a bit of relief. But thank you very much for your time.
Thank you very much, Peter.